Well, the City Lodge Hotel Group was founded in the 1980s by Hans Enderle and operates 4 separate branded hotel chains in South Africa. City Lodge, Town Lodge, Road Lodge and The Courtyard. It's a market cap of 3.5 billion rand with a dividend yield of 2.94% and a price earnings ratio of 25. City Lodge expanded dramatically ahead of the 2010 Soccer World Cup. The group has finally made progress elsewhere in Africa with a new Town Lodge to open soon in Botswana. Well, Chris, let's get your thoughts on City Lodge. It has long been a favorite with many fund managers across the board in the sector.
Yeah. I've watched this thing pretty much since inception, you know, when the Mines Pension Fund got together with Hans Enderle and launched this, based on the Hampton Inn concept in the States, but they've taken it and they've made it their own. You know, if you compare it, well, in fact, it's not comparable with anything in South Africa because of the fact that it's so consistent within the brands and across the brands. So that, for example, if you take it and compare it with Garden Court in the Southern Suns group, they're also very good, in my opinion. They're excellent, but I don't think they have that same degree of consistency. So for the business traveller who actually wants the same thing in the same place every single time, guaranteed, City Lodge fits the bill.
So it's on consistency that City Lodge is winning, so to speak.
And it was very well run by Hans Enderle for the first, 20 years of its existence. Very conservative, didn't go crazy, didn't expand too fast, always kept their own properties. As Chris is alluding to, some of their competitors, people like Southern Sun tend to look for management contracts and they look for external funders to actually pay for the buildings to be erected. City Lodge kept it to itself, still fairly small. I mean, it's only about 3.5 billion market cap, but like it a lot. Hans
I'm surprised you even look at it, Paul.
Well, interestingly, we looked at it and in fact bought it quite heavily in our client base in the year 2009 because they were gearing up. So in other words, the group was very conservative, had very little debt. Then they decided they were going to go big for the World Cup. Unfortunately, everybody else was as well, but we kind of thought that they could grow the business, which they did, about 40% new rooms, and then we'd benefit from the same occupancy rates, just with the extra gearing added to the business, and it'd be a huge win. Unfortunately, we had the global recession and everything else, so it has not been all that successful, although it is now trading back at its kind of 2007, 2008 highs, which I think was at about 85 Rand a share.
Would you be buying into the stock now if it's trading at its 2007, 2008 highs?
On a long-term view, I love the story, and particularly because of their recent announcement about going to the rest of Africa. Getting sites has always been very, very difficult for all hotel groups. But, as we're starting to see Africa becoming, very much the flavour of the month, I think anyone who's gone to Africa, it's the devil's own job trying to get a decent hotel there with decent service. And City Lodge will do there exactly what they've done here. I'm quite convinced of it, and I think that it opens up fantastic opportunities for them. So in the longer term, I have no problems, even although it is expensive at these levels.
And occupancy rates, are they going to level out? We know that the whole industry is under pressure on this front, as we were discussing last.
Yeah. So last night we were talking. I think Daniel was saying that the average for South African hotels is about 50%, and I think that may even be an international average. City Lodge was always at 80%. Why? Because people, A, knew what they were getting. It was like eating at McDonald's. You could go to any city, anywhere. But with the crash and with all the extra rooms they've added, the big ones were in Pretoria and the one right inside the OR Tambo departure kind of area at the end of the Gautrain line. So the occupancy's plummeted to sort of around 55, 60%. So if they can just get the numbers back, you can imagine what the impact on profits would be. So for me, it feels like one of those mid-cap stocks that's got real legs to run, although, as I say, I'm deeply conflicted because we own lots of them for lots of our clients.
In terms of getting those occupancy rates up, is it just a cyclical issue, or do we have too much capacity in the system? Again, something that we've discussed recently, that is going to overhang in the market for a very long time to come.
There is too much capacity, make no mistake, but I don't think it's going to be a long-term thing. It happened in 99, 2000, 2001, when you had a lot of foreign hotels coming in. I'm thinking like Hilton, the Hyatt, that type of thing, and that had pretty much the same effect on City Lodge. They're going to come through this, I'm sure, with flying colours. As Paul says, they put the capacity in, they're going to grow into that capacity, and I think relatively quickly. Let's not forget that their main target market is the business traveller, and they do offer incredibly good value for the business traveller. as a result, as a bit of backwash from the World Cup, they did manage to get a lot of people from overseas that they'd never had before. So I think in the longer term, that will also feed through into them. So I think it's just an incredibly good winning formula.
With such a focused offering and a winning formula, if I can steal your words, surely there is corporate activity potential with this one.
Yes, good point. A couple of years ago, Hospitality, which was a hotel-focused property fund, actually made a bid to buy the company because they thought, well, we can buy them and then we can spin off the management company. And I think it is interesting because the net asset value per share of City Lodge is somewhere in the region of 75 Rand or 80 Rand. In other words, the company's value on the market is exactly equivalent to the replacement cost of its buildings. So, you know, it's got that kind of underpin. Somebody could come out and snaffle them up. And there are certainly lots of international hotel groups that might be interested in doing that. But I think for the moment anyway, they are best poised to kind of take their own life forward. They've got an empowerment partner. Bulelani Ngcuka, the previous NPA head, is the chairman of the board. It's got a great internal culture. They've got programs to send people that are staff to hotel school, and it's really a cute little South African company. Doesn't have a lot of labor issues.
I love this story. Let's go to hot or not in your book, Chris.
It's very hot.
Very hot. Paul, you're going to give this one a hot?
Yeah, it's hot for me. Thank you very much.